We're going to talk about Santa Claus, but we're going to talk about the Santa Claus rally, which is a thing that you might have heard about. I figured I would talk a little bit about it just to kind of give some education around the markets. So we'll talk a little bit about the history, why the Santa Claus rally is a thing, if we think the Santa Claus rally is going to happen in 2024, and some of the things I'm looking at in 2025. And we're going to talk about year end price targets and whatever. So this is a market episode. This is market information. This is stocks. This is bonds. This is all things investment related. We're not going to get too much into the weeds. I'm going to throw some numbers around. But I think it's just going to be kind of some interesting context if you're keeping score at home of where the stock market is trading today, depending on which index you're currently following. So the Santa Claus rally, just kind of as a backstory, it refers to a basically a historic phenomenon that's been watched since I want to say 1950, and the term was coined in 1972 by Yale Hirsch, who's the creator of the Stock Traders Almanac, and what he said was that if Santa Claus fails to call, the bears will come to Broad and Wall. So that's the intersection of where the New York Stock Exchange is on Wall Street, and so it's Broad Street and Wall Street, that area. So the Santa Claus rally refers to the final 5 trading days of December and the first 2 trading days in January. And historically speaking, when the market rallies during that 7-day period, we tend to have a good return on the markets in the new year going forward. If it fails to rally, then historically that's also been a what we call a bellwether for negative returns or a bad year in the stock market.